All right, everybody. Stocks by the numbers. Welcome back. And we have big news hitting here late afternoon, Friday, of course. Intel Corporation, ticker symbol INTC, listed here on the NASDAQ. Stock popping up to over $23 a share on the news of a potential takeover by Qualcomm, ticker symbol QCOM, now coming in. Stock sitting now a touch over $22 a share, up a full point, 4.75%. Stock was up about 7% on the initial announcement. And if you look here, you can see Intel up on report, Qualcomm approach company for takeover. Now, I'm not seeing any specific financials disclosed, and obviously everyone's just kind of updating this. Qualcomm Intel did not immediately respond to Reuters' request for comment. But basically, in my opinion, first of all, right now, this brings the market cap up to about $94.5 billion. And even though last quarter was a pretty rough quarter, big miss on the EPS side, miss on the revenue side, and they also announced big potential layoffs coming out. They also recently spoke about potentially spinning off their foundry business, because that was basically where the main losses were coming from. And now we have the news that Qualcomm just looking to maybe take over the entire company. And this is why, again, there's not much really to update here on the numbers and whatnot, because we actually did that recently, just a couple of weeks back. And I do know that I said, in my opinion, I like it in the numbers when it was at 28, 29 going into those earnings. And then, of course, the stock tanked all the way down to 18.5 and has since slowly been rebounding. But if we pull up like a 1 month, no, when was it? Here we go. Right? So we were back here at 29. I said, in my opinion, I like it. We dropped down. I think it was like around here or something. Maybe I did an update and I said, in my opinion, it still looks attractive in the numbers. Longer term, it's probably going to be fine. And this almost falls into the same category as something like a Rolls-Royce, right? There's a brand name company. It's been around for a while. Chances are they're not going to let it go under, in my eyes. They're not going to let anything happen to it. And the company is either A, going to turn it around over time on its own merits, or B, something like this is going to happen. And this is why investing, in my opinion, is much easier than trading, right? Because first of all, you're allowing yourself more time if you're, investing into shares as opposed to options. And also, if you're able to grab the shares, you're not on a deadline, right? You're not under the gun waiting for that expiration date where you're hoping and praying that something's going to happen. You're just buying and you're holding. And the good thing about that is, this essentially goes back to the Buffett method. And what I mean by that is, Warren Buffett always says he doesn't look at the stock the way a lot of traders do. He doesn't look at the stock, he looks at the business. And that's why even when I did my video originally here up at 29 going into these earnings, I said, in my opinion, looking at the value of the business, there should be some growth potential here. And this is what happens. So again, we don't necessarily have specific financials on the deal. So we don't know, 100 billion, 130 billion. We don't know what the buyout was going to be for. However, as we know, one of the old rules in stocks is when you're talking about a company getting approached for a takeover, buyout bid, what happens now is the stock essentially is worth what someone else is willing to pay for it. So if we find out it was $25, $27 a share, whatever it was, then chances are the stock's immediately going to jump up to that value and probably hold that value for a little while. We saw the same thing with U.S. Steel. U.S. Steel, again, initially the bid started to come in. First bid was 35, stock jumped up to like 32. And then bids came in at 40, stock ran up to 38, 41, 42. Right? Then you had Cleveland Cliffs, Nippon Steel come in 50 plus. All of a sudden, the stock's up at $50 a share because it's worth what someone else is willing to pay for it. So in my opinion, you have to add at least, I want to say at least 15, 20% on top of what they offered. So if we find out it was, $27 a share roughly, then in my opinion, it's probably worth $29, $30 a share. Right? If it came out at 25, 26, then it's worth probably at least 27, 28 in my eyes. So this is why, again, this is a perfect example of not looking at the stock, not worrying about any recent news, but just looking at the situation that this company has been around for decades. They were a brand name in the space. They consistently paid dividends. a lot of older people, I'm sure if you speak to them, they'll tell you that they had a position in Intel or they still have a position in Intel. And the only reason why people have been kind of throwing some shade at them over the last couple of years is because you have other tech companies like AMD now growing nicely and grabbing some of the market share. While Intel is now obviously losing a couple of contracts, losing a couple of bids, and now that was starting to eat away into their profits. So people just kind of want to sweep them under the rug and act like they're done. But again, a company that's been around for whatever, 60, 70 years, however long they've been around, chances are they're not going to go anywhere. And while no one wanted to touch them down here, assuming that they were just inevitably going, inevitably going to get gobbled up by these larger tech companies, again, what's happening now is we still have value there. And now, with the stock taking a hit, in my opinion, this was perfect timing by Qualcomm. Because now they may be able to actually take over this brand name business that everyone knows, and they can do it at a deep discount. Because again, if we back up, you can see this stock was up here in the high 30s, it was in the 40s, right? Now it dips down to sub $20 a share. Boom. Now you step in, oh, we'll buy you at a discount, we'll absorb the stock, don't worry about it. And this is why, again, I say Buffett method, look at the actual business and the company. Don't be so obsessed with the stock and potentially what a lot of these articles or media kind of tries to tell you about the stocks, right? That's why I always say, in my opinion, I like to take a step back and I like to look at the long-term, bigger picture to see if there is value there or not. And again, I feel Intel probably going to go higher because I'm sure the bid was not for 22, 23 or wherever the stock went today. I'm sure it was much higher than that. But looking at stock charts quickly, I'll let you go. You can see the RSI here. Let's refresh. RSI still middle of the road, sitting here at 54. So again, we still have more room to run. And this news again came out. It was like 3:15 today on a Friday. So now that the news is going to spread, you're probably going to see the stock continue to slowly climb after hours today. And more than likely, it's going to be up again Monday as more people find out about the news and then decide to jump in some shares, probably pre-market Monday morning. So in my opinion, this 50-day moving average here at 23.85 really shouldn't be a problem. And I'm actually expecting the potential gap fill here back up to like 29. But of course, again, we do not have financials disclosed. But MACD recently crossed to the upside, even though the stock took the hit, and it's just been slowly climbing up. And now you can see again, we have a big pop today on this news coming out. RSI on the weekly still down here at 36, right? So on a longer time frame, this is what I mean. This is why now with the bid coming in, remember, even if they don't accept the bid, it is technically worth what Qualcomm was willing to pay for it. And even though the stock just took a hit, because they were approached by another business, again, that automatically proves that there is value there. So in my eyes, that's why it's slowly going to run back up to the high 20s at least, just off of this announcement, whether they take it or not. And of course, you can see the MACD really fell off a cliff and has been dropping hard since the ball dropped in 24. And now off this news, though, this could be the potential turning point. This could be the U-turn recovery. And you see the flattening and the curling now of the MACD here on the weekly. So this is why now over the next couple of weeks, we can start to climb, potentially bullish cross, and that'll help drive the stock up even higher. You may actually see a run back up to this 50-day moving average here of 35. But again, it may have a pause if we find out the exact financials disclosed. But again, we'll cross that bridge when we get to it. But the 50-day moving average was what? On the daily, a touch below 27. You can see the mid-Bollinger Band here on the weekly, 27 even. So in my opinion, that's probably the level it's going back to. But let's check the pivot points real quick. I'll let you go. This is really good news for shareholders. And again, even if you jumped in early here and then you got screwed kind of with this bad earnings report. In my opinion, like we say, sometimes you have to weather the storm. You have to deal with the short-term volatility to look for that long-term growth. But the pivot points here, you can see next resistance level up there, a touch over 32.25. So that might take a little while unless we hear that the bid was for 29 or 30. Then it'll probably immediately jump up there. But you can see we have a pivot point here at 23.80 and the 50-day on the daily. Oh, my apologies, and the 50-day on the daily, 23.85. So in my opinion, that 23.80-ish mark is more than likely going to get hit, and then the stock, if it closes above that 50-day, it'll signal more bullish momentum, and then you'll probably see like that previous pivot point of a touch below 26, and then we'll jump up here maybe to about 28. But overall, good news, and this is why, again, I personally love the Buffett method. Because, number one, he was the most successful investor in American history, so to not listen to his advice, in my eyes, seems very, very silly. But also taking a step back, as we said, and evaluating the actual business, the actual company, as opposed to the stock, can show us long-term growth and long-term potential that a lot of investors and traders may not see in the short term, because they're looking at, price action or the PE or last earnings, when on the flip side, as we said, we have a decent business. Even though it's been suffering recently, we have a decent business, a brand name that a lot of people know, and I'm sure there's a heck of a lot of IP on the back burner, and the company was currently in its restructuring phase here with the layoffs and whatnot. So that's why even in the moment, if Qualcomm does absorb Intel, that whole branch of the Intel business arm under the Qualcomm umbrella is probably slowly going to increase in value itself as well, because they're cutting costs and they're going to try to obviously sign new deals and generate more revenue moving forward. So in my eyes, phenomenal call by Qualcomm to step in here after this big drop. This is what I mean. They drop it down hard, they sweep it under the rug, they take the spotlight off of it, they want you to forget about it, then they slowly climb it back up from 18 to 20, 21, 22, and now all of a sudden the company gets approached by a Qualcomm with a takeout bid, and now who knows where the stock is going to go. So the whole time the traders were saying it's done and they're going out of business, now all of a sudden they're potentially getting bought out, right? And again, I will say it, I don't care, for the 7th time in this video, I don't care. This is why, in my opinion, I like to take a step back, block out the noise. I don't care what's trending on Yahoo Finance. I don't care what ideas are on TradingView, who's saying what on Discord, what's trending on StockTwits. Irrelevant. Sometimes you have to take a step back and look at the business and see if there's value there. But that's pretty much it. I can probably do another update if we actually get some news. A deal for Intel, which had a market value of roughly $87 billion earlier Friday, would be massive, suffering through one of the most significant crises in its 5-decade history, right? See what I mean? That's what I'm saying. 50-plus-year-old company. Like, they're not going to let them go under, in my eyes. A deal is far from certain. Even if Intel is receptive, a deal that size is all but certain to attract antitrust scrutiny. See an opportunity to strengthen the country's competitive edge in chips. To get the deal done, Qualcomm could intend to sell assets or parts of Intel to other buyers. So as more news hits, of course, I will do updates. But again, as we saw, we did not receive any comment or update yet from either Intel or Qualcomm. But as that news hits and we potentially see a definitive amount for the takeout, then of course we'll come back, we'll do another update video. But technically really, really good news for Intel shareholders, and anyone who got in even back here, or if you averaged down, or if you bought recently, obviously congratulations. Very happy for you guys. But that's pretty much it. I'll end it there. So once again, Stocks by the Numbers, I want to thank you for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Enjoy your weekend.